What's going on, you guys? My name is Zach Hartley, and in this video I want to tell you about a biotech stock that is up over 100% in just the last 2 months, and I think they have a whole lot more room to run. Here is everything you need to know about Cardiol Therapeutics. Okay, so Cardiol Therapeutics trades both on the TSX and the NASDAQ under the ticker symbol CRDL. They are headquartered in Ontario, and the market cap as I make this video is roughly 192 million USD. This is what their logo looks like, and their website is cardiolrx.com. Now, I have made a video about this company before. I posted it on August 4th, 2021. Here's what the thumbnail looked like from that video, and when I posted that video, the price on the TSX was $2.56, and I said, guys, we've got some major support coming in right here. We've got some resistance around $5, and we've got a very clear bearish trend line. If we see a bounce off support, a breakthrough of this trend line, and a crossover of our moving averages here, that is going to be a very strong sign. And it turns out that is exactly what happened. The stock ran from a low of $2.56 here to a high of $5.82, up over 127% since I posted this screenshot right here. We actually made this video at the low, as you can see, $2.56 there. We are up over 127% since I made that video, and I think it still has room to break out. So first of all, I think we got lots of room to go up to $6 here, so there's probably another 20 cents. And then if we can break through $6, this was some previous resistance from before this peak, that is going to be a very, very strong bullish indication. And so when I look at this chart here, it's kind of like the holy grail of investing and trading, because if you look at this here, we've got a major level of support at $2. We got the bounce off of $2. We've got a breakout of our trend line right here. The stock broke through the trend line. It broke through 3 of our moving averages here, so 20, 50, and 200-day moving averages. We also had increasing volume. As you can see, look at the volume for the 2 months right here, and then look at this volume right here over the last 2 months. It has dramatically increased. We also had a crossover of our MACD, and it went into the positive territory, and our RSI came out of the oversold zone. So when you look at it, in a matter of 2 weeks right here, maybe 3 weeks right here, we had all of our technical indicators line up as a buy indication, and you could have done extremely well on it, up over 100% right now, like I mentioned. Now, Cardiorx, if you're not familiar, or if you didn't watch that last video, Cardiol Therapeutics is a clinical stage biotechnology company focused on the research and clinical development of innovative anti-inflammatory therapies for the treatment of cardiovascular disease. Basically, they develop drugs and treatments for heart disease. Now, their main drug and their main basically future revenue generator is this drug called Cardiorx. It's the leading drug in their candidate phase 2-3 development, and it has a high concentration of cannabidiol formulation for acute inflammatory heart disease. Now, this is their drug, and they're actually taking it through for 3 different indications, which means they have a fairly robust pipeline. So the first indication is patients with cardiovascular disease hospitalized with COVID-19, and then acute myocarditis and chronic heart failure in different formulations here at different stages in the pipeline. And what's really exciting, and one of the reasons that I think the stock has seen such a dramatic run up lately, is because of this announcement here that came out on August 24th. Cardiol Therapeutics receives FDA clearance of investigational new drug application for phase 2 clinical trial of Cardiorx for acute myocarditis. So if we go back to the pipeline here, you can see acute myocarditis now in phase 2. That is very, very exciting. And this was a big stage, a big milestone, and a big check mark for the company, because it's basically that next sort of section of getting through these clinical trials and getting closer to commercialization. Now, one of the other things that just happened recently and that was very exciting is when I made that first video, the stock was trading on the OTC exchange. Now they have uplisted and they are trading on the NASDAQ exchange, and that gives them access to a much broader group of investors, a much larger group of people, and more people can get into the stock. And what that does is it creates more access. It doesn't create more supply, but it creates more access so people can get in and increase the demand. That can be a driving factor when it comes to price. If the demand increases but the supply stays the same, which has been the case recently, then that could drive the price up. And so I think that is one of the other factors here. But either way, the company is going in the right direction, because I followed them for a little while now, and each and every quarter they're checking off the milestones. So first of all, they raised $11.1 million through the exercise of warrants and stock options. Then they appointed a new chief medical officer. They also enrolled their first patient in that phase 2/3 Lancer study that I talked about in the last video. They received top-line results reported from a phase 1 single and multiple ascending closed clinical trial of Cardiorx, and they did a $22 million bought deal offering. They also appointed a new chairman, they uplisted to the NASDAQ, and this announcement here was the FDA clearance that we just talked about. So everything that the company says they're going to do, so far they have done it, and the reason that I think there's a lot of potential left in this stock is because they still have a lot of upcoming milestones and catalysts that could drive this stock higher. So the first catalyst here is when they complete the enrollment of that phase 2/3 clinical trial. That is going to be very exciting because that is going to mean it is 100% underway and we should get results shortly after that. They also plan to initiate the phase 2 trials of the Cardiorx for acute myocarditis that we just talked about. So when we get some data back from that, or when that fully gets underway, that's going to be another catalyst. And then thirdly, they're completing the preclinical development of a subcutaneous formulation of Cardiorx for treatment of chronic heart failure and initial clinical program. So when that gets underway and that starts reporting results, that's going to be another catalyst that could drive the stock higher. So overall, I think the company's going in the right direction. They've checked all the boxes, and coming up, they have a couple more boxes to check that could drive it even higher. And when you look at the market for their drugs and for their solutions, it's absolutely mind-boggling. Because if I asked you what was the biggest cause of death in the United States in 2020 or 2021, you probably would say COVID, but in reality, in 2020, it was actually heart disease and then cancer and then COVID-19. And this company is developing drugs to directly treat and help with heart disease. And so the market for this is absolutely massive. If they can get these to commercialization, I just think there's such a great opportunity here, and the financials look good as well. So let's dive into the balance sheet here real quick. This is what it looked like as of June 30th, 2021. And I like to look at the balance sheet first instead of the income statement because this tells you how the company got to where they're at. And what's exciting about this is that they have $32.7 million in cash, and they only have $3.012 million in total liabilities. So they have over 10 times more cash than they have total liabilities, and that means that this is, no matter what, a very, very healthy balance sheet. They hardly have any liabilities. They've got a great cash balance. They've got a little bit of prepaid expenses here, but this is one of the cleanest balance sheets that you will ever see. I like it. It looks phenomenal, and I think it's very well managed. And they're actually going to be increasing that cash balance here because on September 10th, Cardiol Therapeutics announces acceleration of expiry date of warrants issued on June 4th of 2020. Now, if you don't know what warrants are something that is issued by the company to investors, to employees, to shareholders, to whoever it may be, and it gives that person the right to buy the shares at a very specific price on or before a specific date. And so if the price that they can buy it at is lower than the market price, they're allowed to go in and buy it at this price, and then they can do whatever they want with it, but they've already made that amount of profit. So the warrants are really, really nice, especially for investors. I hold a couple in Drone Delivery Canada and a couple other companies, but they're really, really nice because they're kind of like options. They're very similar to options, but the person on the other side of the transaction is the company, and the shares that you get are going to be issued by the company. Now, what's really interesting about this one is that date that you have to redeem your warrants before or on. The company in this situation has accelerated that date and moved it up higher because the stock price has ran up so high. So they had a clause in the warrants that allowed them to do that if the stock traded above a certain level for 10 days in a row. Now, what's really interesting about this one is that all of the people that held these warrants, there was 744,156 warrants outstanding. I don't know how many people owned them, but that's how many warrants were out there. And those warrants were able to execute and buy shares at $3.25. Now, as we saw earlier, the price is very well above $3.25. And so most of the people, probably all of these people, are going to redeem their warrants at $3.25. And when you multiply these two numbers here, it means that the company is going to bring in an additional $2.4 million worth of cash in return for those warrants and issuing shares. So very, very exciting news here. The balance sheet just continues to get better, and the shareholders and the investors launches that are already in are going to continue to do extremely well. Now, when you look at the income statement here, they did start to bring in a little bit of revenue. They brought in $78,000 here. Nothing significant, not a whole lot of revenue here, but at least they're bringing in a little bit, which is nice to see. The big focus for us, though, has to be acknowledging that this is a biotech company that is developing the pipeline right now that is not quite at commercialization. And so what we need to focus on is the expenses. And when we look at the expenses here, it's really nice to see that the largest expense for this company is research and development out, basically $1.9 million. And that is exactly what you want to see from a company that is developing a pipeline of drugs. It needs to go into research and development more than anything else, and that is the exact situation we have. They are burning about $6.5 million, $6.4 million per quarter here, and that should give them at least a 1 to 1.5 year runway, which should be plenty of time for them to bring some of these drugs through to commercialization or raise more money if needed. So overall, I think these financials look really good. Now, here are my final thoughts. Number one, excellent product pipeline. They're developing one basically system of technology that can be formatted into different types of drugs and used for different indications. I think that is the best way to develop this company, so I really like the strategy here. Also, the financials look wonderful. The balance sheet is extremely healthy. The income statement looks very reasonable for what I would expect out of a company like this, and I think it is very well managed from what I can see from the outside. Now, I also think the company is hitting all of their milestones. I've covered them for a little while now, and so far they have done everything that they said they were going to do, and it also looks like we have a couple more catalysts coming up on the horizon over the next few months. So far, I like everything about this company, and I'm very happy with how we are doing. Now, stock market fundamentals. This is my course that is hosted on Skillshare. So if you want to learn about how to analyze the chart and find those entry points or read the financials, then you should definitely consider signing up for this course. It's completely free. It's hosted on Skillshare, and the link is in the description down below. When you sign up with that link, you get 2 weeks of free access where you can take my 10-hour course. There's over 8,000 students that have already gone through. There's 325 reviews for you to take a read through, and you can go through the entire course completely free. Cancel that subscription in under 2 weeks. You won't pay a single penny for it. I promise you, it'll be the best free resource that you can find online. Over 80% of students say it exceeded their expectations, and I would love to share it with you. The link is in the description down below. Now, just as a disclaimer, you need to do your own due diligence. This video is just my opinion. This is a sponsored video, but if you get any value out of this video, remember to click that like and subscribe button. I sincerely appreciate it, and we will see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.